The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down $1.24. You get the Nasdaq down 41. S&Ps are down 12. Gold contracts up $4.60. You have silver up 3 cents. Platinum is up $1.50. We have the light sweet crude up 46 cents, trading $47.78 a barrel. Notes, 10-year note up 2 ticks, 128.28. 30-year bond down to 150.15. King dollar down 49 ticks, 99.510. The euro is at 108 to the U.S. dollar. The yen is trading at 113.5 to the U.S. dollar. And bottom line is that Macy's is in tough shape, man.
So is Snapchat, right?
So is Snapchat.
We'll see. I think Macy's is in more tough shape than Snapchat
I
probably
totally
is.
listen. At the end of this correction, if this is the correction, man, I think I'd be buying Snapchat if it's ever $10.
I had a college professor once that said, would you want to be in a great company in a dying industry or the worst company in an exploding industry? Of course, you'd always want to be in the exploding industry because then you have potential no matter where you are.
It's huge.
And the brick and mortar retailer industry needs a revamp, to say the least, if not,
it's
pretty much.
If we bring up Macy's, folks, okay, this is like a monster heads up, It's been a disaster, but this is a confirmed ABC down on a monthly basis. I mean, I was looking at this morning. It's like, man, this is in trouble in a big way. I mean, it basically broke down. It's been breaking down for a long period of time. Okay, but if we take it from July of 2015, bottom line, 70
less than 2 years ago, not that long.
No, it's not, and now it's going to confirm another one. Okay, and they both come down to about $8,
Yeah,
and
8 to 10. I saw in your newsletter.
And I can see it now. I mean, you can actually see when you're talking about a major store with huge expenses.
Yeah, what'd you say? 4% decline somewhere.
4% decline on.
Oh no, keep going.
Yeah, 1 second. Yeah, here it is.
Pummeled.
So the retail shares plunged after post a 4.6% decline in same-store sales last quarter. That's like,
same-store sales, yeah.
That's big.
5% in the same store is a huge number. When you're talking about, they're dealing with margins that aren't insane. So, that's a huge number of volume that they're losing in terms of sales.
And you're talking, I would say, I'm talking from a personal standpoint, you're talking about large customers that spend a lot of money. I used to spend a lot of money at Macy's.
Yeah,
I love Macy's.
I love it,
okay?
No, they have great
stuff. Guess what I do now?
What do you do?
Between the hotel collection and everything that I like there, I get on the internet, boom, boom, boom.
Sure.
Guess what?
Sure.
That's where I order.
Yeah. No, I
and,
agree.
instead of spending $1,000 at Macy's, guess what? I might spend $800 on the net. But,
I hear you.
Yep. That's
you
a big...
spend it at Amazon.
It does. I do.
Right. No, I hear you.
And it's not that you do it maybe a couple times a year, but there's a customer going.
It all adds up. I hear you, but all adds up. How about Amazon? What are they doing today? Just even
exactly.
Exactly. Because guess what? That money's going somewhere. And when Amazon controls...
Amazon's down $5.
Yeah, relatively flat. For a down day in the market, too, relatively. Right. As in, that S&P opened up down 8-10 points off the open there.
Right.
And, relatively
flat.
And
Snap, we go over to Snapchat. Snap is down 486. Trading now, this puts everyone except if you got it on the IPO price in a losing position, folks, because it went IPO at $17, but that means it didn't trade at 17.
Can you pull up maybe just a longer chart?
I'll show you. I was looking at this last night. So the opening was actually $23.50.
Good luck to those people.
$24 was and then 2 days later it was up at $28?
Yeah, I mean you can see there's every single time it's traded, every single person besides the people that got exclusive shares is in a losing position.
Right.
But in fairness, I would not be super terrified maybe of that. In terms of if you're able to hold it. Yeah, if you're trying to trade it for a pop, good luck to you. That might be a far cry after yesterday.
Yeah.
But they're a popular.
Someone's going to buy them out. Listen, I agree.
I use Snapchat. You know, it's a cool app. It is. But guess what? It's not an ecosystem like Facebook is that you can monetize kind of that type of way.
Right.
It's not.
Right.
It's much closer to Instagram. And Instagram gets a lot of their function through Facebook, right? You know, in terms of just at least sharing all the technology, and you know, they are Facebook. So
no doubt.
Yeah.
And Facebook hasn't moved. Facebook is at the highs. Do you know what I mean? Which is pretty amazing. No doubt about that. Let's go over and take a look at the S&P. So inside the S&P out here, and we have gas numbers coming out too.
Yeah, natural gas.
Okay, we'll jump to that in a second. So this S&P right here,
quite an open.
Yeah, it's not only just an open. Now the correlation you have here. Number one, I think we're going to hit the lows again, which is 2380. And the real question is going to be, is it going to be an ABC structure on the way down, intraday?
Sure.
If we get over and we take a look, and you're going to see this, you had Mark Carney talking today. It was the head of the, Britain's central bank, okay? I love this guy. I really do. I like how he presents things, okay? And it was good. Bottom line is that what I get out of it is that they were going to let inflation run over the 2%. Okay. What he felt is that it was more important that people have jobs than he worried about the economy running too hot.
Okay.
And, there were people on the other side saying, they still don't have jobs and all this, and which, listen, I don't know what side is right. But as soon as I heard that, I says, okay, he's not going to be the only one that's going to let the economy run hot versus jobs. He's a big central banker. It's like, okay, all the central banks going to do that? And in that context, I'll show you, what, because the dollar was up, and I sold the dollar. I said, you know what? This ain't gonna fly. You stay right there. Tommy and I are coming right back, folks. Dow is down 110. Nasdaq is up 39. S&Ps are up 11. I actually bought the euro. I didn't sell the dollar.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. And if we get over to the Nadex platform, we take a look at this gas, folks. And if you haven't tested the Nadex platform, it's always a great time to do it. You can walk along with us as we trade these defined option contracts.
You know, what's the VIX trade at? I'm just curious, as I meant to pull it up. Do we have it up there? No, that's Snapchat. I was looking at that earlier today. Yeah, almost 11. I figured it was approaching.
That was quick.
You had a $10 sell-off.
That's all it takes.
After. It was at 10.50 pre-market, and the market opened, and, the S&P sank 10 points real quick. 11 coming off like 950, 960. Decent move, but still, 11 is like nothing. It's just relative to where we've been. It's a little expensive.
Sure.
Okay, so jump into natural gas. Let's try and see if we can get our chart to load. Computer's just being a little bit slow right now. Of course, we might hit a snag. Why don't you pull up natural gas over here on maybe the UNG? Or
Absolutely, yeah. Let's see. First, I'll pull it up this way. So, well, look at this. It's already up 1.1%.
Yeah, and that's why I was saying to you during the break, and we had pulled it up, that the spreads might be a little bit far away from the point that we need them to be at.
Okay. Yeah, so what we're doing, this is wild. So what has been doing, folks, you had a nice spike yesterday up to the 342. Yeah, 342, and it's testing the 342.
Yeah, and quite a run even since Monday. I mean, you're looking at, on Monday, we were trading at 322, and now we're at 342, 20 cents since Monday.
Come up too, yeah.
Okay. So this is the delayed feed over here, correct? I believe?
Mine is, yes.
That's the one that they're looking at. Now I'm bringing over Nadex. Okay, so June contract, we're trading at 333.5. I took a look at the 11 a.m.s first, and so 335 would be our best point that we could choose for kind of an up and down volatility trade.
Okay.
We'd have 20 cents on each one. 20 cents is pretty outlandish, though, for one day's movement on these, right?
Right.
Versus, so this is the positive one. We're, call it 15 ticks below even where the box begins.
20 cents is insane. That's a $2,000 move in the futures.
Right. So that's just to keep in mind when you see some of these potential risk rewards. That yes, they are your risk reward, and if you get that kind of movement, but in realistic nature, So here's the minus, the negative one would be selling that. So all the value, 15 ticks worth of value to the downside, plus your premium is going to be about 22. 8 here, 30. Now the way to look at this, and it's almost kind of like what we were talking to Daryl about Monday, where this would be like a bearish trade.
Yes.
With maybe an insurance policy to the upside.
Right.
Versus just a straight volatility trade.
Right.
Because yes, you're gonna start making money at 335.9, but you're at 333.5. That's a decent move to even begin.
It is.
Recouping money from here, but then you'd have to make sure that you're recouping the full 30 cents. So you're gonna have to go 3 cents above 335. So you're going to 338 before you even break even, which is more than 4 pennies. That's 4.5 pennies, or 4.5 pennies. So and you can make that trade, but this is definitely a bearish trade. It's not the same volatility trade that we're making. Now, the other thing that I pointed out, right?
This is a good one, yeah.
Yeah, when you get so far out of the money, and I've said the same thing on binaries, right? Where maybe you can sell the binary at like 7, but the market maker is only willing to sell it to you if you want to buy it to like 98. And this is an example where, so right now, if you want, let's say you wanted to make a directional play.
Yeah.
Let's just say that you wanted to go bullish. So let's just close this guy out. We're just going to make a bullish trade. We're far out of the money.
Yeah.
Right? Let's say we just wanted to buy one, and it's reset. It's going to give it to us for 9. Max profit of 199. We're like, oh, well, that seems like a phenomenal risk versus reward.
Yeah.
You're almost getting 200 to 1, 20 to 1.
20 to 1, yeah.
But what's the market maker willing to pay for that same proposition? Now, you might say it's not a dramatic shift when it's only 6 to 7 ticks, but it is a dramatic shift when you look at how the loss and the gain is capped on each side. Because the market maker is only willing to risk 2 to make 198.
Right.
So you're looking at 100 to 1.
100%, right? Yeah,
100
right,
to 1
right.
versus 20 to 1. And then in realistic nature, just a few ticks ago, remember that was
It was
trading
200 to 1.
That was trading at 335.1 by
Right.
335.8, in which case you had to risk 8 to make 192, and the market maker was willing to risk 1 to make 199. So just be aware of how far away you are sometimes from where the market maker is willing to just assign that risk. And of course, he's able to almost like, or she is able to hedge that immediately, right? So that's not even fair market where they're going to be able to probably go in and into the futures
sure.
or something and
Right.
hedge that. But it's still something to consider when you deal with huge outliers where, you know, are you willing to initiate a trade at 20 to 1 for a trade a market maker will only take at 200 to 1? I would just be
No, totally.
something that doesn't hurt to have at the top of your mind.
Oh, there's no doubt about that.
Yeah.
So let's we'll get these numbers as soon as we
Yeah,
come
they'll come
back.
in at 10:30. We'll pass on that one since they don't line up. And I jumped around to the 12 o'clocks, to the 2:30, and just, you know, what happens is that when it's in between, you know, it's a 3:30, 3:05, sometimes that's just not going to line up with the strike prices where you
Right.
get a bullish and a bearish one.
Right.
Yeah.
You know, market-wise out here, let's go over to this NQ. Well, actually, let's go inside the indices first and see what's moving them around.
Getting the decline even further.
Oh,
Down
yeah.
down 140
this
now.
is, we're going to get some action here.
Yeah.
So, inside the negative, you have Home Depot putting 17 negative points in, DuPont 11, Goldman 10, United Health 10. There's only 3 stocks that are positive right now. Merck is putting 5 positive points in, Exxon 1.8, and Caterpillar 0.8%. Inside the NDX 100, you have the winner out here is NVIDIA, that's up 1.9%.
right.
Again, exactly. Mylan Pharmaceutical up 1%. Taken away from it, you have Symantec down 5.8%, or $1.87.
Logic.
Hologic down 4.7, C-Trip down 3.7, and Pacecar down
Pacar, I think, maybe.
down 3.6. So there's let's go take a look at the NQs. NQ. Okay, so you get some action here, man. Yeah, well, this is going to be interesting. So when I was just talking about the S&Ps doing that ABC down, I'll pull this over for a second, but this very well could be an intraday ABC. Let me see how this is shaking out. Okay, so you did the bounce already. Let's see, 10 minutes. Where are we at in our clocks? You're 5 minutes into it. Okay, so you need volume more than 17,000 on this bar, and right now, that's going to be close. You got 6,700.
Sure.
You know, so bottom line is that could get it. We'll find out.
Yeah.
And if you get it, then you get an intraday ABC down. Let me go take a look at the ES Mini. So that's going after the lows. It's when we started. Oh yeah, look at this. This is going to be. That needs 102,000 contracts. It can do it. It's already at 60,000 contracts.
Yeah.
So we may have an ABC down here. If we get an ABC down, you got, 23.92. Get 12 bucks, which gets you 84.74, 72, 23.72 intraday.
Yeah.
That's a good pullback.
It's more than we've had recently.
Oh my God! I didn't realize the market could ever do that again.
That bar sticks out. It does.
The SPY, and you're coming off this high with volume. The SPY rode in 17.8 million. You hit a high with 53 million. NDX 100, 3 Qs. You're coming off that. Look at this with 7 million. Yesterday we got a high at 20 million.
Pretty good.
Something's wrong, right?
I know.
I think something's wrong. Stay right there, folks. Tommy and I come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Just gap, huh? Welcome back, folks. Tommy O'Brien, Tom O'Brien, we do appreciate you growling and prowling with us out here. Looks like we just went from 334 to 337, right?
So we should have taken that insurance policy, I think, because we jumped right above that 335, right? And now we're trading even 370. Where am I going? 337. But again, this is only $20. It would have cost us $30 to put it on because it would have been so bearish if we had done both. But you know what? If you wanted to take a directional play, you did get a pop. We'll see where those numbers come in. You want to try and
yeah. So let's.
Here we go.
Okay.
I jumped too quick. Go ahead. It was. I think it was 45 billion cubic. Go ahead. It was on there, and news is flying too quickly.
Okay, where are we?
There we go. So they rose 45 billion cubic feet. The estimate was 55 billion cubic feet, though.
So they rose less than estimate, right?
Yeah, yeah. Now that's interesting in that there's less. No, that's the
That'd be right.
There's less, and so the price is going up.
Right.
Exactly.
Right.
Okay. I'm going to jump back one more time before we jump around to see. Yeah, so it's getting a little bit of an incline there. It's interesting. Oil, right? Same deal. Coming in less than they thought. Natural gas, less than they thought. Prices going up, and it's continuing to rise. We're looking at right now, even though, just to keep in mind, yeah, as we approach it, but this is still barely break even if we had traded both sides because we were so far below that middle
Right,
of the
this was a
box.
bearish
Exactly.
trade.
Exactly.
Right. Volatility-wise.
Right.
Yeah, you're getting, look at this, it's getting more pressure. NASDAQ is down 52, you get the Dow's off 142, S&Ps are down 16.
Yeah.
You get the GDX up 52. That's got some real action in it. Let's go take a look at the GDX for a
Gold's
second.
up like $7, I think, $8 almost now.
That's a good movement of GDX. You're right, the GDX needed this because the downdraft, that downdraft from the 25th is a big downdraft, 22.92 to 21.95, and we're coming right into it.
Sure.
You know,
Sure.
so If we go over to the actually, if you come over to TFNN, folks, this Saturday morning.
That's right, man. So
Sunday night.
Yeah, Sunday night. You were in here. I was in here. You did a great webinar. So if people sign up for Market Insights, you can gain access to that Sunday night webinar, which will instantly be on your page as all Market Insights subscribers have it.
Yep.
And then this Saturday morning, and what we were saying during the break, maybe we'll finally get some action right now.
Yeah.
At least something, some negative movement, some movement volatility. Yeah. So Saturday, May 13th is coming Saturday. It's Thursday already, 2 days away, 9 to 10 in the morning. You'll be in there just kind of breaking down the week's action. And, you know, it looks like that France vote, because it was just so expected to the polls, didn't have a huge reaction.
Right.
But it's interesting to see with, you know, Comey, of course, in there, not in there anymore. And then maybe the market today is kind of reacting to that a little bit and saying there might be a little bit of slowdown in maybe the legislation. Maybe, we'll see. But maybe we'll see some action. So they can sign up. They can get Market Insights for a month. They can get the book. They can get both these workshops. And it comes with a money-back guarantee for your new subscriber.
Right.
It's a great deal, man, for sure. And, you know, that's Saturday. And then same Steve Rhodes. Next Wednesday, he's got a great workshop coming up. 5 essential patterns for timing the market. He was just in there covering for our man Larry Pesavento at 9 o'clock. So you can go in. Same, you can get a free trial to Steve's newsletter. You get instantly access to his money management webinar that's added, and then he's going to do his workshop on Wednesday night. And if anyone out there is a member at TFNN, you can still access that free workshop Steve did for a half hour last month right on your members page.
Sweet.
Definitely.
Check it out, folks, right in the front page of TFNN. Let's get to Lou in Nashville. Hey, Lou, what's going on?
Hey, how you doing, Tom?
Doing great, man.
Doing
Yourself?
Okay.
Hey, Lou.
I'm doing okay.
Good.
Hey, I'm in Nugget at 29.50, and I'm wondering what I should do at this point.
You should put your hands in your pocket and ride it, baby. Hey, let's go take a look at it. It's up. Let's go to the GDX first. So you get the GDX up 52 cents. What we're doing here is that now you're into the bar. So the big bar that we were just talking about, Lou, the top of that bar is 22.92. Now, this is into it good. Let me look at it intraday here for a second. Okay, so it's not saying much intraday. I would, so let's go over to the Nugget. If we go over to the Nugget is up 227 right now. You could take this. What you could do with the Nugget is put a stop right there. That's good. I'd put a stop. You're at 33.42. Put a stop for the day under 32.65. And where I'm going with that was the last 10-minute bar. That's the low, under the low of the last 10 minutes bar. And as this keeps, if it keeps going up like I think, you just keep raising the stop. But you got to get a big bar. You got to lay it under a big bar, because this ain't going to be a one-way market. I mean, if it is, God bless us all, okay? But
yeah, I know what you mean.
But that's how I trade that. You know.
Right. That sounds really good.
You know, if we go over now, here, let's go over to the euro, because I want to show you something, folks. What you have out here is that the euro, you know, got down to a price point of 108.39 today. You're at 108.68. So it's back inside the higher range. And, you know, my take, I'm bullish on this, by the way, okay? But I think this is going to go to 108.92. The dollar thus far has failed. That is giving, you know, some good juice to the equities, as well as the actual physical gold. But you can see physical gold still hasn't really moved that much, you know.
Yeah.
Well, actually, it's doing. No, it's actually it's pretty good right now. You said $7, so it's got the volume. Oh, this is gonna get interesting, folks. Okay, so watch that bar there. It just got the volume going over this consolidation. So, okay, so now let's do this. I like to take the top of that bar, which is 12.25, take the bottom, which is 18. That's saying, to me, 12.32 is game. Where's 12.32? That's up here somewhere.
A little bit higher.
Yeah.
Keep going.
That's good. Look at
It's
that.
12.35.
Yeah. So, that's saying that we can get some real action out here today, man. So, the key to, you know, just keep raising that stop, man. That's the way I trade it.
Yeah, that sounds very good.
Okay, man. You have a great one and a safe one, Lou.
Hey, thanks again, Tom.
Thank
See
you.
ya.
Appreciate you growling and prowling with us out here. Hey, is it beautiful up there today?
Very nice.
Perfect, man. Perfect.
Very nice.
About time, middle of May.
Third day.
There you go.
No, that's great,
know.
man.
Yeah. Thank you again.
Okay, man. Have a great one. Have a safe one.
Just jumping back to take a peek at natural gas. So 337. So what's interesting here, right? That's a huge move, but again, we would have been able to get in just even when we're making directionally 335.8, and it's at 336.8. So you've been risking 8, and you've only made 10.
Wow.
Yeah, and so you can see that there's a
That's intense.
when you're paying that premium, you need
Right.
a bigger move than
Much, and that's a big move.
then that's a big move, right?
Right.
I would agree.
Yeah.
For sure.
That's
Yeah.
a big move.
And that's where, you download the demo, you at least get used to it, and that's,
You do.
because we're so used to it. We're used to, saying that's
Right.
a lot of premium when you're
It is.
15 ticks out of the money already. Then you got 8 ticks you're paying on top of that.
Yeah.
So you got to move, 2-3 pennies before you start even making any profit. And most of the time you're going to lose that entire investment. So you
Yeah.
can't just make 1 or 2 or 3 ticks when you're going to
No.
lose the entire 8 most of the time.
Right.
Yeah.
I mean, because the market's saying you're going to lose that, 9 out of 10 times, right?
I don't know, more than that.
Is it?
It was giving us a lot of, it was 8 to make 192, right?
Oh, that's even more than
Yeah,
that.
and then, but then
right.
the market maker was only going to take like 1 to make 199 or 2 to make 198.
Yeah.
So somewhere in the middle of that was the probability.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's down 125. Nasdaq's up 49. S&Ps are up 14.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
877-927-6648. Percentage-wise, folks, this is what you have happening out here. We got the Dow down 0.5%, the S&P's down 0.6, and the Nasdaq down 0.7. And normally, if we talked 6 months ago, actually almost a year ago, 6 months ago, I guess, that wouldn't be a big move, but this is like the end of the world out here today.
Yeah, what were we with? How many days in a row within 0.2, right? A lot.
Yeah.
A lot. Everyone heard that conversation, I think, if you were
Totally.
watching here or if you tuned into Bloomberg or CNBC. If you were around the markets, you heard that the market was, you could just see it right on the graph where it's just...
And, right. I mean, I get the SPY up here.
I think it was all of these days because even though it was closing within 0.2, and you can see...
Yes.
This one even counts because it was down, but it closed to where it was.
Right.
So it was every day it was closing within 0.2%. Pretty wild.
There is no doubt about that.
Yep. And they say in the den, the bull's not going to let that market fall over 100. Get it back within that 0.2 range.
That I could there's no doubt that this is not going to be given up easy. That's just not the way it goes. If we go over to the notes for a second, this is good, man. I mean, well, this is good if you're a bear, but the notes right now are trying to get back over this 125. You're at 124.30, so there's 32 ticks in notes or bonds, folks. So it needs 2 more ticks, and it gets in the higher range again. And when it went in the lower range, it had light volume, so it's not like it came down when it came down hard. And if that gets in that higher range again, it's like, okay, you got to be kidding me. Like,
no one's kidding anyone, man. It's happening.
Yeah, specifically that, what rates are still going to stay low. Well, that's what the market's saying right now. We take a look at some of the higher volume stocks out here in this market. Snap is look at that. Snap's the highest volume stock.
By like triple anything else too. 63 million shares.
Yep. You get Bank of America down 23 cents. Macy's 384. That must be so tough, man. You have such a great store, and you're done.
Can we dig into the Snapchat?
Yeah.
Let's see if this talks about the earnings. I know that, of course, the CEO is going to downplay it. Can you pull up the news maybe on Snapchat? Because they missed, and they missed on, like, everything.
Yeah,
but there's such small numbers in the grand scheme. I mean, you're talking about, I think they wanted 168 million. Slide down to here, just because this is this morning. I want to see their actual...
Yeah, I can pull it down with this.
Okay, sure.
That's the 10th.
We're almost there. That's what,
There we go.
Perfect. So let's see if we have...
The estimate, that's active users. Want me to go one more?
No. So this is...
Okay.
That's kind of exactly what I'm talking about.
Yeah.
Daily active users, 166 versus 168. I mean, this company's worth $22 billion, I think, market cap-wise, we looked at it. You're telling me that 2 million active users on a daily basis is going to make or break this company? You know what I'm saying? That it's a small numbers we're dealing with in terms of if it's all based on future expectation right now. So they need more growth and so forth. But you're telling me that if it came in at 168 versus 166, that it should be worth 30% more than it's worth today?
No, I'm with you.
And the revenue miss wasn't that. I mean, they're barely creeping into revenue. I think they have 160 billion in revenue, and maybe it'll be here somewhere. And they thought they were going to have like 168.
Yeah, they lost $2 billion.
So revenue 150 million versus 158. I mean, you're talking about $8 million in quarterly revenue. That's nothing. The company's valued at 22 billion. So just
what I thought was pretty cool. If you read, like, what happens, folks, is that on one of these articles here, what Bloomberg is saying that the guy, the CEO that's running it, is like
Evan Spiegel, I think,
pretty arrogant.
You can almost say that about any tech.
What I love what he said, though, listen to when I was reading through this, right, is that he was going after Facebook, and he was saying, you know what? He says, Facebook is copying us. He says, but that's not the big thing. He says, when we talk about the amount of users, like when you go on Facebook, folks, what happens is that they always ask you, can we take your contacts? Okay. And so they use those contacts as that's all new users. And what he's saying is that that's a joke. Okay, he had an earnings call last night, and that's what he's saying to people. He says, we don't do that. He says, you want to grow? Yeah, you can do that all day long. He says, you hit it, and he says, that's the growth. He says, that's not real growth.
Yeah, right.
So it was really, I really like that part of it. Do you know what I mean? I says, that's, and the reason I like that part of it is this, folks. In the 90s, right? So watch what used to happen in the 90s. In the 90s, when, and this was like the JDS Uniphase, which is out of business now, all these companies that they were using, you and I would make a deal. And this had to do with broadband, okay? And if, you know, I would use your people, you would use my, and they would come out with these numbers.
Sure.
And they were great numbers, but guess what? Those weren't real customers.
Sure.
You know, so it was like, oh man, you know.
My only comeback to that is that Facebook's profit numbers don't lie. And you know, in terms of like, if he's going to knock Facebook's numbers, they have the money to back it up and that's what.
No, I understand that. I understand
kinda, you know, that those earnings are coming from somewhere. And I said to you too, they don't have, and I love Snapchat, I do, it's really cool. But they don't have the ecosystem, like I said. It's a different world, you know. Facebook's is almost its own little internet that they've monetized.
It definitely is.
Snapchat is just kind of a messaging service. So when you put it in that context, it's a little bit scary. We've seen, you know, gigantic tech companies rise and fall, right? And guess what? Facebook is trying to copy some of their stuff. And guess what? Maybe they can. I mean, that's not, you know, like,
listen,
exactly.
If I saw Microsoft, okay, bottom line is that, you know, he bought the operating system, DOS 123, off a guy, smart as anything. The guy couldn't get it going. Bill Gates and Allen got it going. And from that point on, anyone, I saw them, Lotus 123 was huge. And all Lotus 123 did, folks, they were actually 2 doors down from me at Harvard Square.
Okay.
Mitch, there were 3 people in that business when they opened. I'm going back to 1980 now, when you were born, okay? But this was crazy because they made a spreadsheet, but that was a big deal.
Sure.
And they ran with it, and then Mike said, well, I can make a big spreadsheet.
Right. Right.
And then they just kept, you know, it takes Microsoft all of if it's a heavier thing, maybe a year and a half to catch up. But
and that's what, you know, I've seen it already. Facebook tries to publicize they have a new camera. I don't use my camera on Facebook. You know, you take a picture, maybe you post something on Facebook, but I've seen where you just hit the wrong button, you're in the camera, and it's telling you they have a new camera. So, you know, we'll see what happens.
What do you mean? Like, if you're on Facebook, you hit their camera?
Right, right. And I think it's probably adding to your camera as well. I don't know. I've really never used it.
It's probably using your camera.
Right.
But yet,
well, definitely it's using your camera. But is it saving it in my camera roll, or is it saving it in just my Facebook roll?
So it's making it easier to post something on Facebook.
Exactly.
Yeah, right.
Yeah.
Right. Pretty well.
You know, that's one of those things. Is there a real barrier to entry, right? You know, I mean, we've all seen like Shark Tank where they say, can I replicate the same model for less money than it's going to take me to buy you?
Right.
Well, you can do a lot with $22 billion if you're going to buy Snapchat, right? In terms of, especially if they have something that's kind of, you can just replicate it.
Well, when you just brought up the point in the commercial that Facebook bought Instagram for $1 billion?
Yeah. Steal, I know.
That's
and
crazy.
Instagram is blowing up, as in a great way, you know, as in exploding. And that has to do with Facebook funneling their people into Instagram too. Okay,
Right.
so they're benefiting obviously from that. But the user experience is kind of nice. We've said, you know, people sometimes are getting the Facebook user experience might not be as beneficial as it used to be.
Right.
And everyone likes looking at cool pictures, you know, and so that type of deal, and you got filters on there, you can make them look cool. Yeah.
Stay right there, folks. Tommy and I are coming right back. Dow is down $1.25, Nasdaq's down 46, S&Ps are down 13.5. We're going to be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
It's factual to what's going on, so it's going to be up to him whether he wants to do it.
We're live, man.
It's a beautiful thing.
Yeah.
Welcome back, folks. 877-927-6648. You get the Dow down $126. Nasdaq's down 48. S&Ps are down 13.5. We go over and let's go take a look at this E-mini, because this little baby, let's see.
It's hanging around that 2381, 82 now.
So, it first leg down right there. Okay, that was 2380. We got under it, but you didn't get under it enough volume. So it's not ABC intraday. So that was 102,000 contracts, and we got in there with 82. Now, 82 is a good deal, meaning that more than likely you're going to see that get retested. Now, the way that I always look at this and to say, okay, why do I think that's going to get retested? Because, see, then we came off of that, and as we got higher again, you only did 32. So now we had 32 against 102. So it's going to be, this is the building cause aspect, and, we'll see whether, when you come down that fast, it makes sense that you're going to build cause for whether it's hour, 2 hours, 2.5 hours, in order to basically reject that lower price or, in fact, go south and go south with some juice, man.
Let's take a look at that natural gas and see where we're trading at as we come into the end of that half hour. Yeah, so it's under even 337. So you'd be looking at about $20 in value if we had traded those 11 a.m.s at 335. 20 on the dot right now at 337. And again, you can see that was a nice jump right away. Almost 4 pennies, right?
Yes.
And, you'd still lose $10 if you had traded 10, maybe 15, both sides of it. And even if you had made the directional play far out of the money, you'd barely be making $10, $12. Yeah.
And, if we just do this quick, we'll just go over there for a second. You see, remember, inside this platform, too, folks, we're trading, the NDX a lot. I'm trading gold a lot. But I like trading the dollar and the euro, too.
Sure.
So on that downdraft this morning, when the European Central, was actually Carney from Britain.
Yeah.
But I basically bought that euro this morning when that was trashing. And that's in the currency market, you're going to see, per tick, it's pretty amazing. that you're not paying a huge amount of premium. God bless you.
Excuse me. Thank you.
It doesn't have, they're tight spreads.
Yeah. No, definitely.
Yeah.
You can see you got in there at about 8:30 this morning, which is pretty close to the bottom of that, where it was trading at about maybe 1084 and change.
Yeah. I only paid a couple ticks.
Yeah.
So
not bad, because you're kind of near the middle of your spread there, right? As in, that trade cost you about $100.
Yeah.
You're risking $100 to make, what, $150? I think it's a $250. So pretty close to the risk reward. Yeah. So you're not going to have to pay much premium, which is nice.
Right.
Yeah.
And, that had to do with, when you go back over, what I always end up doing there is I was into this dollar index, and, I felt like the dollar index was coming into, what you're going to see is you're going to see one spike, and then it basically was testing that spike. See, the first spike right there it is right there. So that first spike is at
about 8.
Yeah, was at 810.
810.
And then the second spike,
like 8:30.
Yeah.
Yeah, 8:30.
And it just didn't have enough juice in it. Man.
Sure.
So it's like, okay, man.
Okay, man. That's it. Time to go.
My probability is that this thing can come back inside. But it's so wild about that one is that I was looking at that technically, but that's right when Carney was coming on, and he was saying that he's going to let inflation run. I said, so he's going to let inflation run, man. Gold's going to go, the dollar's going to go down.
Sure.
Sure. And it didn't have to do with Britain. It had to do with one central bank is not going to do it.
General consensus.
Yeah. If they're going to let it run, they're going to let it run.
For sure.
You stay right there, folks. And man, Mr. Basil Chapman's coming up next. And then we'll go into Think or Swim headquarters. Steve Rhodes, Dave White, myself, and it's already Thursday, so our man Andy Hex is back.
That's right.
Thanks, pal. Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.